start, I want to introduce myself. My name is Rose Escudero. Really hope you guys are doing well and safe during this enhanced community quarantine. Stay safe. To begin, I'm going to be speaking to you today about working capital management and financial preparedness in times of uncertainty. The first presentation or the first part says three ways to financial preparedness. Save, save, and more. That's the number one important way to financial preparedness. Consider saving money in an emergency savings account that could be used in any crisis. So we should funds allocated for emergency savings. The second is to get organized. So we know where the important information is. We should also know what information to collect, like social security cards, insurance policies, prescriptions, and emergency contact information. If we knew where our vital information all was, if it was organized into folders and files and boxes, we could just grab it. So in case my fire, my flood, or other disaster, we're ready. We're organized. The third one is to have an emergency storage, including cash in small bills. So keep a small amount of cash at home in a safe place. And it's important to have a small bits on hand because ATMs and credit cards may not have worked during a disaster when you need to purchase necessary supplies. And like now, during this COVID-19 pandemic, it's hard for us to go to the bank, sobrang haba ng pila, or withdraw money to ATM machines. Kaya it's very important if we keep a small amount of cash at home. We should always prepare for any possible emergency, and it's never too late. Let's discuss the financial struggles of entrepreneurs or business owners. Struggles like pain points, challenges, problems. And over 11% of the world's unbanked population, between 40 to 70% of adults, rely on informal lending. And according to 2017 Global Findex database and the Asian Development Bank, only 33% of Southeast Asian small and medium enterprises or SMEs have access to loans or lines of credit. And working capital management. So working capital, of course, it's capital. So it's the backbone of any business. So learning how to maintain or generate more cash in your company is vital to success. It's very, very important because it's used in its day-to-day trading operations. It's basically the cash you need to operate or your current assets minus your current liabilities. Without enough working capital, you could lose your flexibility and credibility with financial institutions, suppliers, and customers. Below is an example balance sheet used to calculate working capital. So yung balance sheet, income statements, it's part of the financial statements. And I've mentioned na yung formula to get the working capital is current assets minus current liabilities. So the first one is cash. If we have cash on hand like 500,000 pesos and we have accounts receivable like 200,000 pesos. Accounts receivable, it's a claims for payment held by a business for goods supplied or services rendered that customers have ordered but not paid for. And if we have inventories like 350,000 pesos, inventories or stocks, it is the goods and materials that the business holds for the ultimate goal of resale. Good thing for inventory is like malapit na yung peak season natin, yung bare months like may 11/11, 12/12, Christmas season, and let's say March, Lazada birthday sale. So we need to stock more inventories. And current liabilities, it's composed of accounts payable, short-term borrowings, and accrued liabilities. Let's say for the accounts payable, it's 250,000 pesos. So it is the money owed by a business to its supplier shown as a liability on company's balance sheet. And then short-term borrowings, let's say 85,000 pesos. It reflects on the total carrying amount as of the balance sheet date of debt having initial terms less than 1 year or the normal operating cycle. From the word short term, so para siyang utang mo pero less than a year lang yung maturity from end of FS date. And then the last one, accrued liabilities, let's say 150,000 pesos. So it's a liabilities that reflect expenses that have not yet been paid or log under accounts payable during an accounting period. So ito yung mga expenses mo na hindi mo pa nababayaran pero nangyari na more on operation. So in order to get the working capital, 1,050,000 pesos less 485,000 pesos is 565,000 pesos. So that's your working capital. And please remember, keeping sufficient working capital on hand can be a major challenge for cash-strapped entrepreneurs. When you say cash-strapped, meaning if a person or organization is cash-strapped, they do not have enough money to buy or pay for the things they want. Example, if your competition suddenly closes up shop and you need more inventory to service their customers, you would need working capital to buy that additional inventory. Without it, you're unable to react quickly. So it's very, very important to have working capital on hand. And for the operating cycle, why is it important in management of cash flow and management of working capital? So as you can see in the operating cycle, there's an inventory period, accounts receivable period, and accounts payable period. Because in operating cycle, to get the cash conversion cycle, the days inventory period or the days inventory outstanding plus days sales outstanding or the accounts receivable period less accounts payable period or days payable outstanding. Dun sa inventory period, andun yung days kailan na purchase, date kung kailan nabayaran, kung kailan ka nabayaran, and days kung kailan mo nabenta yung product mo. Yung accounts receivable, days kung kailan na-receive. So, dito sa operating cycle na to, it's like, you need to get the number of days. So, yung formula niyan, like for example, sa inventory period, parang, yung average inventory mo divided by cost of goods sold. So, yung cost of goods sold, ito yung mga product na, for example, you're selling bags and perfumes. So, how much yung total puhunan mo dun sa bags and perfumes? So, that's the cost of goods sold. So, yung formula ng inventory is average inventory divided by COGS or cost of goods sold times 365 days. You will get the number of days. And for the accounts receivables period, accounts receivable divided by net credit sales times 365 days. And for the accounts payable, end of period, accounts payable divided by COGS divided by 365, you will get the number of days. So for this, it shows the length of time it takes a company to buy inventory, convert it into sales, and collect the accounts receivable revenue from the sales. And a shorter operating cycle is typically better because it allows your company to generate cash faster, which you can use to pay bills or grow your company. What do you mean by shorter operating cycle? Ito yung mga mabilis yung pag-generate ng cash. For example, I'm selling ready-to-wear products. Let's say, hindi siya ganun ka-expensive and cash on delivery or walang terms. Or let's say 7 to 15 days if kakilala mo na yung customers. Better siya kasi mabilis nakakaikot yung pera. But if you have a long cash conversion cycle, it's very difficult for you to manage your cash flow. Why? If you're selling home appliances and if you're selling electronics, gadgets, or any other equipments na medyo expensive, for sure, meron kayong payment terms or agreement ni buyer. And especially if walang mga down payment and umaabot ng 60 to 90 days yung collections mo, sobrang hirap makagalaw. Kasi you have employees, they need their salaries, so you need money. You need to pay your office rent. How much is it? And you need to pay your driver, your electricity, your utility bills. So if lahat ng collections mo is nakastuck sa mga buyers mo na like old clients mo na or loyal clients mo na, paano ka makakagalaw, 'di ba? If sobrang tagal ng collections mo. Kaya I suggest yung pinakang effective way is if you can get a down payment from your buyers or customers, like 25% down payment or 50% down payment, and then the remaining days, pwedeng ano na lang, like say 7 to 15 days. So, I'm speaking in general, like if meron kayong mga other platforms like Facebook page or physical store, and if you're selling expensive things, mas better talaga na yung operating cycle is short para makapag-generate tayo ng cash faster. And uh, I have a story here. The reason why startups shut downs. So, yung kakilala ko, like, yung hindi niya masyadong na-manage yung cash flow niya, like, um, bili ng kung ano-ano, like, hindi naman siya need, like, I need new equipment, but meron ka pang old, so, pero nag-start pa lang siya, like, startup and small company pa lang, tapos labas na agad lahat ng pera. So, magkakaroon ka ng loss. And another reason why startups shut down is because of the poor unit economics. And when speaking of unit economics, why are they important? So, simply put, unit economics are a measure of the profitability of selling, producing, offering one unit of your product or service. So, at a high level, the point of unit economics is to understand how much a profit a business makes before fixed costs, so that one can estimate how much a business needs to sell in order to cover its fixed costs. Speaking of fixed costs, yung mga example ng fixed costs, ito yung mga amortization, depreciation, interest expense, property taxes, rent, salaries, and utilities. So, as a business owners, we should understand how much a profit business makes before natin mabayaran yung mga fixed costs na yon. And tough decisions ahead. So, as a business owner, you should think about where you want to be in 1 to 5 years from now. Like, I have an existing Lazada sellers, and yung kwento niya sa akin, parang she started selling like RTW clothes na for ladies lang. And nakita niya yung growth ng store niya. And parang she's thinking, what if she can add additional stores or additional products? Kasi nag-grow na yung company niya eh. So, as a business owners, dapat we create a goal list kung ano yung mga gusto nating gawin. Like, you want to purchase additional products, or you want to renovate your office to make it bigger or to make it better, or you need to add additional manpower or business expansion, like you need to add additional branches. So, yeah, from that one, business owners need to see loans as a tool that is used in order to get the money needed for the business. And finances are always necessary, so you do not have to be afraid. And it's also important if we have a finance partner who can help with us, especially this time in the midst of this pandemic, or if you want to expand our business. It's very important to have a finance partner. Like, if we build a good relationship and you build a good credit standing, it's very easy for us na i-priority ka or i-prioritize ka in your refinancing application. So yeah, dapat yun nga, as I've said, we need to create a goal list, andun yung mga plan natin sa business if we want to make it bigger.